To help us make sense of today's market movements, we're now joined by Sandra Araullo of ATR Asset Management. Good afternoon again, Sandra. Good to have you again.
Good afternoon, Stanley. Thanks for having me.
All right, let's look at the quick numbers. We ended at 70.62, down almost 0.5%. Value turnover decent at 7 billion. Still above 7K, although it's down. Do you see 7K as a strong near-term support already, or are we still very vulnerable to profit taking, perhaps the kind that would bring us back to the 6,800 level?
I wouldn't call it necessarily profit taking, but maybe a little bit of some of the buyers staying on the sidelines, because we do expect events in the next couple of weeks influence global markets. I'm talking in particular about the February FOMC meeting, and we do expect the Fed to ratchet up its rhetoric about the need to tighten financial conditions by being steadfast in their policy direction. So with markets kind of opening the year strongly, it actually moved in the opposite direction of where the Fed needs it to be. So financial conditions have loosened quite a bit. And so we do expect them to talk against that. And that just gives local investors an opportunity to enter at better levels. So maybe the 6.8 level is already a good level to deploy further.
All right. Now, in recent rallies, Sandra, we also saw better volumes, but more than hefty turnovers, of course. It's important to know how much of this is foreign buying and what were these foreigners buying at these price levels? I mean, what stocks did they shore up on?
Right. So we observed that a lot of the big gainers so far this year are really just your biggest underperformers. Maybe particularly Monde, Converge, up 30% year to date, but that's also because they were down 30% in the full year of 2022. And because of the, you're down 30%, you're up 30%, doesn't even bring you back to your starting point, right? But to your question on foreign buying, we have seen the most in names like BDO, JFC, Bloom, and AP. So it's not, it's the same actually as the names that local institutional buyers are adding up on because of the fundamental investment thesis behind these companies. And anytime you see an SM Prime, for example, gaining, that's a sure sign that it's outside investment, or at least your hot money that's deploying to the market. Because I mean, we are still very far away from what we think is fair value based on earnings expectations and just based on the emerging market discount that we've seen historically.
Yes, so it's still the safe heavyweights. Now, moving on to the ongoing World Economic Forum, which is giving us a lot of insight as to the degree of pessimism of global economists and businesses for 2023. That is, of course, in contrast to the bullishness exuded back home. We're even talking about the president saying the stable labor force in the country will be enough to at least buoy the Philippine growth towards achievable levels. Also banking, of course, on domestic consumption and positive growth in general. Now, does this provide some sort of insulation this year, at least for the Philippine economy, as compared to the other economies seeing a more bleaker year?
Yeah, so in the US, we're really where recession risk is really the narrative for this year. The question of whether we can sidestep that, I think it's a tall order, because when something happens in the US, every economy suffers, particularly emerging markets. But I think because of the China reopening story and how ASEAN benefits from that, that does help buoy the prospects for our local market relative to developed markets. So it really just remains to be seen how deep this recession is going to be for the US, how much further the Fed is going to raise their policy rates. It's going to be a very, what we call, path-dependent year. A lot of things are yet to happen, but certainly there are catalysts that can push the market toward where fair value is.
Okay, now still on the sidelines of the World Economic Forum, President Marcos, of course, met with some businessmen, particularly Swiss multinational company Glencore, presenting investment options in mining processing. And even during the president's state visit to China weeks ago, there has been focus on investments in this sector. Are you seeing the country's mining pitch gaining traction, of course, in terms of price appreciation of some mining issues?
Well, it's a development that we're also keeping track of. The question really is, we know that there is a direction to shore up the funding for this Maharlika Fund connected with mining earnings of the country. So the mechanism there isn't clear. We don't know if it's going to be through taxation. So it's really hard to pin down how it will affect the industry as a whole and mining names related to this development. So we don't really have a very clear picture yet of the how. But certainly more FDIs are welcome. We do need that kind of investment, especially given the macro environment. We really need to continue with the infrastructure spend and making the collection of taxation efficient to fund all of these things.
All right. Lastly, Sandra, well, there's nothing final on this yet, but the proposed additional taxes for luxury goods is sparking conversations on what this means for companies selling high-end brands, which will eventually perhaps raise prices, companies like SSI in particular. What's your take on this?
Well, I think the government, as I mentioned earlier, they're pressured to find ways to fund, especially the train law has reduced income tax collection, and we're seeing a windfall for this year. Things need to make up for that so that we're not so stretched on the fiscal side. And so taxing this I guess tenet of taxing the rich is the least the lesser of the other evils. You know, you don't want to tax a bigger base of lower wage earners because we're already struggling with inflation. So I guess it's something that is it's a solution that the government is exploring. And for sure, the margins of these of this segment of the markets are gonna be affected.
All right. On that note, we thank you so much for joining us, Sandra Araullo. Thanks a lot for your market guidance. Good afternoon.
Thank you.